Settles above 25,800. Broader markets outperform.
Shares of Indian IT companies fall in trade. The decline comes amid a global sell-off in software stocks after Anthropic's new launch, reviving concerns about AI's disruption across the sector.
Mid-caps outperform with select stocks seeing sharp moves. E2E network surges after the NVIDIA tie-up for AI factories. Aurobindo Pharma slips on serious US FDA observations at one of its units. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Reema Tendulkar, and with me is Mangalam Malu. And Mangalam, another good session. Barring for the pain the IT sector is feeling, the rest of the market held up well.
The rest of the market held up well, actually added to the gains as well that we've been building on over for the last two trading sessions. The good part is on Monday, we crossed the 20-day moving average. Today, we crossed the 50-day moving average as well. So now all eyes will be whether we sustain above these levels and go past that 26,000 mark or not. For that, the IT pack has to do its bit, because today it was under pressure. Yesterday, it supported the frontline index, but the IT pack was down about 1.5% for the index, though there was recovery from the lows. Two things that did extremely well in today's trading session, particularly in the second half. We had the Nifty Bank, which held out for the bulls, so ended about 0.6% higher. And the second one was Reliance, another Nifty heavyweight, ended at the high point of trade, and that explains why the market moved higher towards the end on the frontline index. The mid-caps as well did fairly better. The index was up around 0.5%, with advance decline firmly in favor of advances at around 1650 versus declines at around 1300.
Okay, let's also tell our viewers what we've lined up on the show today. We'll start with the top movers of Shaker. Sudarshan joins in. IT stocks, Aurobindo Pharma, ITC buzzing in trade. What's driving them? We'll get you all the news and analysis coming up, and then the top corporate voices of the day. But first up, it's over to Gaurav now. He's at the big wall with the top movers and shakers of the day.
Well, yes, if you look at movers today, let's not forget about the Nifty metal segment, because yesterday, for the last 2 days, in fact, we saw Nifty metals were actually suffering, but today we saw some bounce back, especially the names like Hindustan Copper, Lloyd Metals, Jindal Stainless, Tata Steel were some of the top gainers. Apart from that, let's not also forget about PSU banks, because as Mangalam mentioned, Nifty banks was up, and the main reason, if you look at PSU banks index as well, it is up for the third consecutive day. If you look at constituents like PNB, IOB, Maharashtra Bank, Union Bank, all of these banks were up in trade. And in fact, if you look at the index itself, none of the constituents were in red. Other than that, let's talk about the cigarette names in the likes of ITC and Godfrey Phillips. If you look at Godfrey Phillips, in fact, it actually hit its upper circuit at 20%. And the reason being that there is talk that the price of cigarette is going to get increased. NDL Ventures, if you look at this company specifically, now this also hit its upper circuit, and the reason being that CCI approved merger with Hinduja Leyland Finance, and that is the reason why actually stock reacted in a positive way, because market has taken it in a very positive way, given that the CCI has now given its nod. On the flip side, if you look at Nifty IT, now there is AI summit which is going on, and yesterday we saw Indian IT names were actually up in trade, but today we saw some fall in these names in the likes of Persistent, LTI, Mindtree. If you look at Wipro, Infosys, all of these stocks actually were down more than 1%. If you look at some pain stock, there also we saw some pain point building up. And if you look at the reason, Macquarie recently wrote a note where they said that there will be some moderated pace of recovery in second half, and they believe that third quarter EBITDA miss was one of the reasons why they have cut down their target price. And as a result, if you look at these stocks, they also suffered some kind of pressure in a day-to-day. So all in all, it was a day for gainers and losers. Although Nifty has ended at a higher note, we also saw some losing side, specifically from the Indian IT names in a day-to-day.
Right, Gaurav, thanks a lot for that. So those were the list of all movers and shakers in today's trading session, but IT continued to be the flavor of the day today on the downside on account of an AI-led uncertainty. But Reema, is it overdone?
Well, it's hard to say if it's overdone. It's really now up to the companies to execute on it and how quickly they can do. As of now, the AI revenues for the IT companies is not very large. Infosys said yesterday it's 5.5%, which ties in with what TCS and HCL Tech have also quantified. So overall, it's about 4 to 5%. Brokerages are largely bullish, though, on Infosys. 38 out of the 52 analysts who track Infosys have a buy call. And there are 5 key reasons we can think of when you compile and look at the brokerage calls why they're bullish. One, the AI opportunity is there. But as I said, it's up to the companies now to execute. Infi said the AI-first services opportunity is $300 to $400 billion by 2030. Two, data modernization is indeed a tailwind. If you have to use AI at scale, enterprises need to clean up their legacy systems in order to use the AI tools. So that's a big, big opportunity. The third one is the tie-up that Infosys had with Anthropic is a step in the right direction. Just in the near term, FY27 is going to be better than FY26. And there is that valuation comfort also because stocks are trading now after the correction lower than the long-term average multiples. But that said, there is a disconnect between what brokerages are saying and expecting and what the market is telling you. The index, the Nifty IT index is down 15% in the month of February. Individual stocks are getting hammered, mid-caps also. And it's pretty close now to its 52-week low, less than 5% away from its 52-week low. And the pain is global. It's not just domestic. If you look at the global software ETF, iShares, that's down nearly 22%. And the other problem is also on the jobs front. We were just taking a look in the 9 months of FY26. The large 4 IT companies' total headcount is down by more than 700. It's an account of TCS, but at least as of now, on account of the macro weakness and AI disruption, there has been a net reduction in jobs rather than a net accretion. We'll find out what happens in the future. For now, the takeaway seems to be there is an AI opportunity, but can we capitalize on it? And to what extent? We had a chat with Sunil Kaul of Goldman Sachs and Kenneth Andrade of Old Bridge Asset Management to understand their views on the IT sector, where we're headed. Listen in.
I think there has been a relentless selling and indiscriminate selling of the software companies because global investors are basically questioning the terminal value of these companies. In the US market, the real issue is not just the terminal value, but the margins for these companies are also at record highs. And so in the next few quarters, until we figure out who is kind of winning, how the business modes are, what the pricing power for these different sectors are, probably there are still going to be uncertainties around this. And so we are not advising clients to buy into the global software companies yet.
This is not status quo. This technology change or this automation is not status quo for a lot of businesses. And I think that's what the markets actually are reacting to. So from a standpoint of just IT services, it's not very clear how companies will adapt and how fast they will be able to adapt. But there will be a lot of uncertainty on how these businesses will meet any kind of growth trajectory, at least in the near term. One thing I must say is completely in favor for these companies is that historically they are quite comfortable in terms of where their valuations are. Extremely comfortable in terms of where their valuations are. But with all the uncertainty around, I'm not too sure that will be the best part of the marketplace to be in.
All right. So to take this discussion forward, Mayuresh Joshi of William O'Neill and Shrikant Chavan of Kotak Securities join in. Mayuresh, a difficult question once again. What happens to IT? Because on days, it's oversold. Some news of tie-ups come by and it improves. And now, as we speak, there is some fresh threat which is coming in as well. So how does one look at this?
Afternoon, Mangalam. No, I think it's a catch-22 situation, right? IT revenues, AI revenues, still a small portion of IT companies as we speak. But again, as Rima explained it very nicely, I think the expectations in terms of having a very clean data set, and that is what we were discussing because we internally had an AI summit at William O'Neill over the last couple of weeks. And the entire perspective was that clean data probably needs to be presented so that it can be analyzed and deciphered in the manner that one needs to. And therefore, I think IT companies should come back in focus. But they also should be upping their game in terms of creating those niche expertise across layers, whether it's agentic AI or otherwise. We probably presented itself in terms of competition. Having said that, I think what happens in terms of pricing, what happens in terms of new order wins, at what price and margins do they come in? Is there some element of intensity happening on that front? Is there an accelerated CAPEX spend that probably happens in terms of not just upskilling its own employees, but also ensuring that they probably are in the right areas and therefore spending in terms of either organic or inorganic growth to probably stay in lieu of competition is going to take some element of toll in terms of margins as well. And is the street ready for that in terms of what they were delivering in the past, and some changes, if any, might happen going forward, which might lead to some element of de-rating in terms of forward multiples. And that is where the confusion lies. Our own sense, Mangalam, is that it's a wait-and-watch approach. Let's see what developments happen. But till that point of time, structurally, I think the price damage is largely done for the sector as a whole. It might just go through a time correction and price correction as well.
All right. Thanks a lot for that, Mayuresh. We'll come back to you for more, and Srikanth as well. But shares of ITC rallied after a UBS report came by on cigarette price hikes. Remember, we had been talking about how price hikes were imminent out here after the near 30 to 40% increase in taxation that came by, which would result in these companies increasing their prices by anywhere between 25 to 30% as well. And that's exactly what is taking place. It's been carried out in different batches, given the different lengths and different cigarette parts of their portfolio as well. And the UBS note that came by, they have a target price of 395 rupees. They've cut their target from 420 to 395. But given the price correction that we've seen on the stock already, they maintain their buy rating. And at the same time, they say that distributor checks do indicate that the price hikes are now arriving for, say, something like the 84mm cigarette. There has been an increase from, 17 rupees to 24. That's the steepest price increase. On the others as well, you have, the 74mm, which has increased from 64mm has increased from 6 rupees to about 7 rupees. And the 69mm as well comes up for you, where there is about 9.5 rupees per stick. They expect the price out here to increase to about 12 rupees as well. So all these factors mean that the company has been dynamically increasing their prices. On premium cigarettes, it's been a lot more, but on the volume-sensitive cigarettes, it's a lot less, which implies that the impact on both volumes and EBIT would be minimal, and that exactly tells you why maybe there could be some positive move on the stock going forward as the street digests the impact of these price hikes and the tax hikes as well. And it's not just ITC. ITC is obviously the market leader, but when ITC does that, the impact of that can be felt on names like Godfrey Phillips and the others as well. Godfrey was up around 20% too. So ITC up 2%, Godfrey was up 20%. Srikanth, ITC from its 52-week high, it's seen a big correction, but from its lows, it's slowly building on some momentum, 9-10% off its lows, recent lows. Do you think it's tradable?
So while looking at the pattern of ITC, it is like it was under a lot of pressure. It was falling consistently. But since last almost 10-15 days, if you see the technical pattern of it, then there has been like some consolidation, and eventually the stock has broken its upward boundary. So while looking at the entire sell-off and now there is a consolidation and recovery, I'm of the view that it's a pullback move that we are witnessing, and up to 345, 350 is not ruled out. We can see this particular upward activity. There we should look for taking or reducing some positions. But at these levels, yes, even at these levels, we can expect at least 3 to 4% sort of upward activity in the near term.
3-4% upward activity in ITC. Let's talk about Aurobindo Pharma that fell in trade after the US FDA issued observations for one of its Telangana facility. Manufacturing unit, Unit 7. Ekta joins in with the key highlights, the key observations, and what the analysts made of it.
Well, yes, the Aurobindo stock was in focus in today's trading session because the details of the Form 483 or the observations which were issued to their company's Unit 7 have now been made public. Now, the observations ranged anywhere from the equipment and the utensils not being clean, which is basically an observation with regards to drug manufacturing, as well as appropriate controls not exercised over computers or related systems, and complaint records, etc., being deficient. Now, analysts, however, have a different view when it comes to these observations which have been issued. So, for example, one set of opinions is that the observation such as number 6 points to data integrity. The 6th observation in particular says that the microbiologist potentially falsified sample collection data. Hence, the view is that one cannot rule out an official action indicated status, which is basically indicative of the idea that this particular unit could be under the US FDA scanner, or maybe even a possible warning letter in the future. The bull case with regards to this is that the observations seem more procedural at this point in time, no serious data integrity or patient safety. The official action indicated status, however, cannot be ruled out at this point, but a possibility of voluntary action indicated status is also a likely outcome. The escalation to something as serious as an import alert is highly unlikely. Now remember that this particular unit manufactures oral solids, and in the recent past there have been 2 units that have been inspected. So Unit 7 as well as Unit 3, which was inspected and issued 11 observations. Unit 3 is already under a warning letter, and the street would be watching out for that very closely as well in terms of an outcome. Both of these, Unit 7 and Unit 3, according to analysts, comprise of around 33% of Aurobindo's total drugs which they have filed for in terms of the US market.
Mayuresh, I already asked you about Aurobindo Pharma, so let me ask Shrikant then. What is the call on Aurobindo Pharma and any particular pharmaceutical stock on which you'd like to share your views?
Yeah, I think like most of these pharma companies have spent a lot of time within the broader range, and base part is that most of these companies are very close to their immediate resistance level. Yes, today because of specific news flow, some weakness in Aurobindo Pharma, but otherwise if we consider the entire long-term pattern of it, then I'm of the view that gradually it is heading higher, and eventually it will start sustaining above the mark of 1200 or 1250. So there also I am of the view that it's an opportunity for medium-term investor or positional investors to take some long position. But in next, if we have to take the view on this sector, then eventually maybe in next 2-3 months of time, we are going to see upward breakout in this sector, and we can see trending move in almost all the pharma companies. So for the time being, it's a consolidation period, but it's an opportunity for positional investors to invest into it.
All right, and Mayuresh, is there any other pharmaceutical stock that you like?
So Strides Pharma is something that we've kept on our radar, Mangalam. I think strong performance every passing quarter that we've probably seen. The US business, both in terms of absolute numbers as well as expectations of few key launches, might keep the US business on a very strong footing. Outside the US, the rest of the world as well as India, I think also probably seems to be very decent. So I think EBITDA margins compared to the rest of the pack, expectations of few key launches over the next few quarters should keep revenue growth and earnings growth in check. And the rating and rankings just look fine. So this is one stock we've kept on another.
All right, Mayuresh, Shrikant, thank you so much for joining in, giving us your views on a whole host of stocks and sectors. We take a leave here, take a short break, come back. You don't go anywhere, because on the other side, we'll get you all the top corporate voices and what they said here on our channel.
Welcome back. GV Prasad of Dr. Reddy said that most regulatory issues over its weight loss drug in Canada are resolved and a launch is likely in May. This was in an exclusive conversation with CNBC-TV18. He said that the company expects double-digit growth in India to continue. Listen in.
There is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
any kind of site inspection?
Usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
How big or how lucrative a market would Canada be?
So Canada, for the initial time when we will be alone in the market for a few months, will be very significant. After that, competition will come in, like any other market, and then we'll start seeing price erosion.
Okay, so let me understand this. When you enter the market initially, assuming...
we are assuming. That's an assumption,
yes.
And we could be wrong. Yes. But as far as we know, we believe that we are close to being the only one being approved in the next few months. Somebody may follow after that, and then new approvals may come in. But we believe that we will have some time alone. That would be a nice period for us.
What are we working with when it comes to the emerging markets? Turkey, Brazil, China, all of them?
So we plan to launch in whichever market we have access to, where the patents allow us to launch, and also where we've registered the product, or where we have a partner who's registering our product. So we've done a number of registration submissions. We are awaiting approvals, and as soon as they get approved, we'll start launching.
If you had to prioritize the markets at this point in time in terms of how lucrative they are for semaglutide, what would they be, including India?
In the near term, Canada is the biggest opportunity, but that's subject to many things.
Yes.
So if it works out, if it plays out, it could be a sizable market. India, the sheer volume will be high because of the number of people in this country. But at the same time, India will be a very competitive market. There are at least 25 others who are going to launch on day one here.
All right, that was Dr. Reddy's, but we did get a bunch of corporate voices of the day as well. Wakefit Innovations, the stock was up 20% this month. The company expects steady margin improvement led by better capacity utilization in their furniture business and operating metrics. They also said that their furniture segment is likely to add 400 to 500 basis points to their margins, even as competition remains intense in the mattress segment, for which they have to increase their ad spends, and the growth estimate was revised downwards to just near 20%.
TVS Supply Chain says that supply chain costs account for nearly 8 to 12% of the overall market. The company tells CNBC-TV18 it will evaluate opportunities with Italy's ALA Group on a project-by-project basis following an MOU to tap into India's $28 billion aerospace and defense supply chain market. Well, with that, it's a wrap in this edition of Markets Forward. Thank you very much for watching. We'll be back with more news and updates on the other side. Start now, guys. Mid-caps outperform with select stocks seeing sharp moves. E2E network surges after news of an NVIDIA tie-up for building GPU clusters, but the company clarifies later there is no new deal beyond the earlier disclosure. Aurobindo Pharma slips meanwhile on serious US FDA observations at one of its units. Dad? क्यों? Why? Guys, why? Start. Done है.